of billionaires comes up, people always say, well, that's net worth. It's not like they have $1 billion just sitting around in a bank account, but the fact that they have money in assets and stocks and not in a bank account isn't a good thing. And let me explain why. Imagine that I was a billionaire and I held stocks in a certain company, and this company was growing and getting bigger and bigger. The value of my stocks is growing, which means that my net worth is increasing, but I'm not actually getting that money because it's held in the stocks, right? Which means that they can't tax me on that. Increase in value of these stocks cannot be taxed until they're sold and I actually get the money, and then I'm taxed on that money, which means that I don't have that money to buy assets. I cannot buy another 10 mansions. But what I can do is I can go to the bank and I can tell them, you see, I have all these stocks. I'm very rich. So why don't you give me 100 billion? Then you can use my stocks as collateral. Now with that 100 billion, that's borrowed money. So you can't tax me on that amount of money. And I can go and live in luxury without paying tax. Borrowed money is not considered taxable income. This creates a situation where someone can live a life of immense wealth while paying relatively little tax compared to their asset. This doesn't come more in the US because when someone dies, these taxes aren't passed on. Let me explain. Imagine you buy shares for 10 million and during your lifetime, these shares grow to 1 billion. Now you borrow 100 million and you live a lavish lifestyle. When you die, your heir inherits shares worth 1 billion, which means they are never taxed on the 990 million that you made. Now the UK works a little bit differently. In the UK, there's something called inheritance tax, which means there's a certain amount of money that has to be paid from the inheritance based on the estate before the heir can receive their inheritance. However, the heir doesn't have to pay any capital gains tax on the increase in stocks made during the deceased's lifetime. The only capital gains tax they have to pay is after the date of death, which means that they can also just keep avoiding capital gains tax and just keep borrowing money.